I'd love to welcome everybody back to the Independent Investor Channel. Ryan here for Friday live stream. Been a little bit. I haven't put a lot of content out in 2025. I've been super busy with other obligations. This obligation always remains in the in the background of what I do and why I do it. Love to welcome all the new subscribers to the channel. Love to welcome the existing subscribers for the channel. For you guys that are new to the channel, name's Ryan, independent investor. Been investing all my life. This is my passion. It's what I'm good at. And so this is kind of my pay forward for people. I can condense decades of experience into what it is that I practice. I can help a lot of people. I know there's a lot of people out there that can benefit from my perspective. I'm certain that there's a lot of people out there that have wealth that would look at my perspective and say, this maybe it's an amateur, but I do contend that there's a lot of people out there that just don't have the basic philosophical idea about how to win in investing, and I think it's unfortunate. I think that the investing savvy and the investing IQ can absolutely be improved. I think that it's imperative that people truly understand how important it is to get this right, and I'm here to help with that. I provide a testimonial on the I2 on what I do, and it's been nothing short of a ride. For you guys that have been with me for a long time, you do understand that we've been through ups and we've been through down days in the market as appropriate. But I think the fundamental approach is what's important to remember about staying true on a plan and not subjecting your money to the emotional roller coaster that has proven itself in 2025 to be quite seductive for a lot of people. We've went through a tariff scare the first of 2025, the likes of we've never seen before. The mass media would have you believe that you needed to lose sleep over the price of eggs. I'm here to report on the I2 that I did not miss a beat with my egg consumption, nor did I miss a beat in purchasing sourdough bread and incurring the additional 37 cents that did not break me with regard to the tariff scare that came through. And here we are. We kind of come full circle. The market's actually up right now. It did digress on us and has come full circle in where we are. I think the broader market, certainly tech leading the way, has left some of the value plays still left behind a touch, and that's okay. I expect that value is going to catch up, and then finally the small cap market, which did get drawn down just like everything else with the tariff scare getting drugged down with the broader markets, has just this week caught a little bit of favor. People are getting a little bit more of an appetite for deploying some animal spirits in this market. I think that very few people out there are setting aside the potential that there is going to be follow-on deals like the one that was released today with the UK, which for you guys that caught the announcement was monumental. I mean, this trade deal was absolutely incredible. To put pen and to paper on a deal that was 25 years in the making. No other administration, and again, I don't dabble in politics. I love you if you're left. I love you if you're right. It doesn't matter. If I was a Democrat or a Republican, it wouldn't matter. I think I would really try to look at this administration not from the red or blue lens, rather the lens that I would encourage each viewer of at least my message to understand, and is this what affects my bottom line? Are these initiatives going to be something that fortifies my bottom line and contributes to the greater whole? And that's where I think investors' loyalty need to be. I think all too often your political affiliation will drive how it is that you're supposed to think, either the red side of the brain or the blue side of the brain. And I don't prescribe to any of that methodology. I think for those people that have known me for quite a while through social media, know that I insist on trying to hone your independent thought and application in this gig. And I think that the more you can separate from what society has deemed appropriate for you to do, I think the more you can separate from others' ideas about what investments are good for you or not. I think the more independent in your application you are, especially when it comes to finances, will find you seeking the answers that I sought early on in my life, and the validation that a liberated dollar can really teach you how powerful money can be if you're willing to deploy money with the lens of looking at yourself as your own entity or your own business or your own brand. I think it's very, very important for people to give themselves credit, not to buy into common themes and methodologies unless they make sense to you. Deploy different strategies. And when I teach on the I2, I typically like to use the analogy for people that if they're an artist and they're dealing with a blank canvas and they come into the I2 and they're wondering what it is that they need to do, they know nothing. How do I start? How do I make sense of this deal? How is it that I can deploy a plan that makes sense for myself? And that's what I aim to share, is the different cornerstones in a portfolio that are more along the lines of fundamental themes of investing, as opposed to here's the top 3 stocks of the month that you need to be buying right now to succeed in the stock market. I've moved away from any type of language like that would find investors being misled, and not understanding why that specific method in the market of finding the next hottest stock doesn't typically work out for the individual investor. And I think it's super important for people to understand what your options are, whether it be passive investing or dividend growth investing, or some speculative investing, or some value investing, whatever it is. If you choose to own your passive investments through ETFs or mutual funds, that's fine. That's you can get ahead. I think if we can get the majority of people off the sidelines, I think we're winning the battle, and speaks to my intent of educating people from the grassroots level. Really trying to speak from a blue collar perspective. I don't, I've said this many times on YouTube, I don't do this for a living. I do it for the cause, and whoever is making their way to the message can absolutely benefit from it in identifying with some of the strategies that I deploy and share. And there are many. I don't prescribe to one method or another. I don't own NVIDIA, Palantir, and and ServiceNow. I don't own 3 stocks in my portfolio and then come on and say, look at my extravagant gains. I think you'll find that in each bucket there is a fundamental strategy or route that is evident in each of those strategies, and I convey that. And so people can actually tune into the message and pick what they want to seek out their level of involvement in the market and become a participant in financial markets. Because I think the most dangerous investor out there is the one that never invests in the first place. I think it's important for people to truly understand how important it is to recognize the importance of saving for your financial future, and avoiding regret later on down the line, and not reflecting back on your life and saying, my goodness, I wish I would have done that. I had the opportunity in front of me, or I had people tell me, or try to help me put a little bit away for the future, or gosh, during my life, I was, really, really poor with my spending discipline. I spent too much, and never really put aside anything for my nest egg later on down the line, and I think that's a big mistake for people. But I do want to address Aduro Clean Technologies, which has met its 6-month mark as of yesterday, actually, in financial markets. November 8th was the anniversary of the uplist of Aduro Clean Technologies. It was the milestone in the company's history that goes back about a decade and a half. So I'll chalk this thing up as about 15 years in the making, where the discovery happened. And there is some pockets of content that's very, very rare on YouTube, and you can get in and understand what Marcus and Ofer were looking at the time of discovery. But I came to a realization a long, long time ago, and I'll give you both sides of the coin, okay? I'll give you the side of the coin that would have certain people joining a camp of people to say this is too good to be true, or it's not true, or whatever, it's not going to materialize, whatever. That goes with any company, okay? When it is related to this company, I actually believe it's more of the latter that I'm going to explain to you now. I actually believe that the discovery that was made here when they were doing a heavy upgrade of oil research and stumbled on the hydrochemolytic advantage with regard to breaking down not only complex polymers, but also heavy oil and also um, plastic, waste plastic, and actually put a pause to the one vertical and moved into the plastic recycling space because of the lack of performance of traditional methods, specifically pyrolysis, and then even deeper than that, the economics that goes behind the application of pyrolysis. And we wonder why pyrolysis is one of those strategies that have been deployed for a long, long time, but the economics just don't back up the science behind the application. It is economically unfeasible to expect to deploy a pyrolysis method and expect that directly there can be an economic benefit. But when you start looking on the fringes of the entire value cycle along the waste stream of the origination and the disposition of certain waste streams, especially plastic in this case, I think you're going to find that Aduro's direct opportunity with their hydrochemolytic technology and licensing that technology to would-be partners down the line is lucrative in and of itself, very, very attractive from an investment perspective. But what we're going to talk about tomorrow, we have a panel scheduled with myself, Yazan, Penny, and Mariusz, all four of us. There's been some big YouTubers I see, the 2-Bit Da Vinci. I watched the movie, the movie, the production this week. It's fantastic. It really just doubles down on the global need for this solution as it presents itself. And I'm cheering for them. It's really hard not to get behind this, and we're on the precipice of a commercialization. And next generation process is scheduled to come out the end of Q3. Aduro will, in Aduro fashion, take their time and do it right. That's just what they've done. I've been an investor in the company going on 3 years now. This is what they do. So don't expect any blow your socks off news that's gonna move the stock prematurely. They're gonna do it right because they know that they hold the goods, and they know that they owe it to the chemistry to get this thing right. And I think it's incumbent upon share owners to understand how patient they need to be in seeing this story transpire as the next generation process, and ultimately the demonstration unit that we're earmarking in 2026. That's unconfirmed as a target date for completion, but I look at those two units as being simultaneously worked on, Mina Bechet on the last address a couple of months ago spoke about their insistence to not look at them in swim lanes, the complete one, and then start scratch on the other. Both of those processes will lend itself to each other. But the panel that I'm speaking about tomorrow is going to be invaluable. It is attempted to speak at the indirect economically of Aduro on the fringes to understand more in totality the value chain that exists with plastic recycling, the cost associated with disposing of the per tons that that exist around the current status quo and the high cost of actually disposing of plastic waste in the value cycle, and why we end up with so much plastic in the landfill and in our oceans, being that less than 10% are actually recycled. If it was economically beneficial to recycle, then we would have more plastic being recycled. And the reality is that we don't. And so you have to dig a little bit deeper below the surface and understand why. Why is it that the cost per ton of taking waste plastic, depending on the level of contamination of that plastic, economically already sets up a disincentive to lending that plastic and paying the high cost and subjecting it to a less than economically viable solution in the value chain along the waste stream? And if you can conceptualize with that idea and then shift your mind over to the Aduro side of the house, all of those value propositions change on the fringes, right? We know the direct impact of Aduro and then them selling their technology, or being able to recycle themselves with the plants that they're working on that are less than, probably 12 to 18 months away, I would say, from offering to the grander market. But think about how the value proposition changes to that high cost of disposing of that waste and subjecting it to a technology that is economically viable and economically beneficial to the customer that's deploying that technology. So it really affects both the upstream and the downstream operations, in addition to the direct impact of running the waste plastic, whether it be a cleaner feedstock or a more contaminated feedstock that can demand a much more higher cost to dispose of that waste. If Aduro can handle those waste streams that nobody else can deal with, you can really start to piece together some economic numbers and forecasts that are scary good. I mean, they're off the charts. So that's going to be our focus tomorrow in our discussion. Yazan's going to lay out the bull case for Aduro as it speaks to the underlying economics, and I've understood this since I've covered the company, but it's really hard to articulate and use your imagination to understand what the Aduro technology is going to look like when it's introduced to the grander commercialization market, and how that's going to affect the value chain in a circular economy. And that's the exciting portion that we're all standing by on. It's going to be fun to watch this thing unfold. It's going to be a lot of fun to see these things come to a reality. And with every new onboarding of upscaling the technology, the more de-risked the company is. In other words, the more the days go by and these the validations and new collaborations and partnerships are announced, the de-risking of the company just continues to lower. And when we first started covering this company, I mean, we were talking about a company at batch scale that was providing some preliminary third-party validation to the technology. And, they then knew what we knew then, and that was that the technology works. We're absolutely able to subject waste feedstock to this technology. and create a valuable product that can be repurposed into new product on the back end. And there's no other technology like it. I do contend that this is really probably one of the paramount inventions of the last century, and aims to solve, or to start to take a bite out of what has transpired over many decades of waste plastic taking over our oceans and landfills. And I know the appetite is very hungry from an industry perspective to lend those dollars to those technologies. There's been many dollars that have been lent to technologies that just have not panned out. This is not an easy solution at all. And so that's why it's important to lend proper credence to the Aduro story right now. Because look, again, just like what I said at the beginning, I always look at two sides of the coin. There's going to be people out there. There was people 3 years ago who said this company doesn't work, in the face of validation, in the face of a looming R2 that was released, one that I visited in person in Canada. I saw with my own eyes the validation of what the input was and what the output product was. And it made me a believer. I've conveyed it through the channel. And at the end of the day, guys, I'm not looking for an investment club here. I'm not looking to get a bunch of people to get excited about an idea where there is no merit behind it. I'm looking to share that merit with you guys, and so you can understand where my loyalty lies, in why I own 56,000 shares of the company. And I'm excited. I get more and more excited the more time goes on, and the announcements that come down the pike only reaffirms for me that these guys are marching in the right direction. The latest release this week was another example of how they are going about engaging with industry from clean farms. The press release is on AduroCleanTech.com. You can kick over there, check that out. But farm waste. So along the industrial but subsector of farming, waste that's generated in the farming industry, I can only imagine is an incredible niche of potential opportunity for Aduro to sport along their multiple verticals that they've got drawn up here, guys. I mean, over the last couple of years, we have dabbled with the idea of recycling the non-recyclable complex cross-linked polymers, i.e. tires. I never thought that that was even possible. And the data that's been proven out on Aduro being applied to multiple applications has been incredibly positive up to this point. You know, this could be a multi-vertical application at the end of the day. And I know we get hyper focused on plastic, but really the underlying root of discovery of the hydrochemolytic technology and its potential application across a number of different verticals is really the value play here. And I think on the onset, you know, I've put a technology valuation over the technology alone, as of 2 years ago, at 300 million. That's my assessment. The CEO has shared in that sentiment. There have been offers of 100 million or assessments of 100 million on the technology. So, you know, let's just call it 100 million on the low end and 300 million. Now, as the company de-risks, that underlying technology value will significantly increase by hundreds of millions of dollars, and then ultimately billions of dollars once it's proven out. So, you know, please understand that the preliminary assessment over the company as a whole, with a market cap of, let's just call it 170 million now, is you know, a kind of a drop in the bucket when we're talking about a potential that is still on the fringes of getting their commercial step finalized. And once that happens, then we are going to close the door on the Aduro of the past, which has been the pre-commercial company working toward this end, and really trying to extrapolate from the numbers what the economics of deploying this hydrochemolytic technology on the grander scale is gonna look like, and we're not quite there yet. Once we do get there, it's off to the races as far as the technology value. That's assuming that there is absolutely no value in the customer engagement and the the immaterial revenue that's being garnered on the top line. I don't want to say immaterial because it's very, very rare for a small company like this to be garnering any revenue whatsoever from major multi-billion-dollar companies. Garnering that revenue for the right of actually testing the technology. It's a very, very novel approach, just as novel as the technology is, and it's a cool way of going about it. It makes sure that Aduro is earning a little bit along the line with the expertise and with the collaborative efforts. You know, I know Total was announced last summer. I've heard some insights on what that relationship looks like through my own due diligence, and you know, Total is in it with Aduro, and I don't want to comment on what is protected thus far through the non-disclosures, and to protect Total's interest as well as Aduro's. But there's a lot going on behind the scenes to provide that validation to the major oil companies out there, and it doesn't get any bigger than Total. I mean, they're one of those companies that if you're in business with them in this capacity, it needs to get people's attention. So very exciting times. I wanted to give that update. Obviously, the partnership with Siemens was from the week before. I thought that was absolutely enormous. Siemens is a company that I'm intimately familiar with on the industrial side, based out of Europe, $175 billion company that's going to handle the automation piece of the reactors. And so they're augmenting the computer systems, the monitoring of the continuous flow reactor to make sure that certain parameters can be set and that the reactor can be maintained at a continuous pace to make sure that the reactors are working continuously to make sure that we're maximizing the output. So the Siemens announcement was just another feather in their cap. I'm not really sure if I can say that the stock reaction to those news releases as they came down the pike was fair. I think the market kind of looks at Aduro as a prove it story, and I'm absolutely okay with sitting on my shares until this massive discovery does happen. Now, just over the last couple of weeks, there's been an investor group that has been turned on to the prospects of, and through the long investor with the Twitter handle long investor on X a lot, as I am. That's great for the exposure, 3,000 members. A lot of those members, if I'm not mistaken, are paying members. Wonderful. It's the same Aduro that I've been providing through the independent investor channel for 2.5 years, starting at 52 cents. So it's the same company that we're recommending. I don't really care how the company gets recommended. I would just charge each and every one of those. The institutions I know will do their due diligence, but the retail investors, you have a lot of work to do in way of due diligence and understanding why it is that you own this company, and not because you've been turned on by an investment group, but because you've done the due diligence yourself and understand the total addressable market here is absolutely monstrous. A TAM that has been unpenetratable by the use of prior technologies, and the opportunity that Aduro is looking to leverage in pursuing that TAM through a more of a modular approach. Okay, they're kind of a customer focused company first, in that if we need X number of tons per annum for a specific company, Aduro can tailor those needs to that. Same idea with regard to a multi-reactor type of application, where Aduro it can meet those needs in a modular sense and provide those reactors to what it is going to be aligned with the customer needs. So very, very exciting time. That's kind of my summary a little bit. Much more has been released since the November 2008. A lot in the last couple of weeks specifically. There's been a couple of months of a fairly dry period for Aduro in the beginning of 2025. No problem. I think they were behind the scenes working diligently on trying to get this the plans finalized, which they are, understanding how they were going to sync up the next gen polymers as it lends itself to the next generation process. How Siemens is going to play a big role in that. So exciting times to come. I did chalk up 2025 as a bridging year. I still believe that to be true. I'm not looking to invest in this company for any other reason than it's a great cause to get behind, but any investor should be focused on the very fundamental reason as to why you invest in any company, and that is money. Okay, make no mistake about it. I'm not looking to sugarcoat this thing. I'm already up, 6 figures of profit in the company. Immaterial in my lens. It does not lend itself at all to where I think the power of where this company could go, the potential, the DBORL price target of $50 speaks to that potential upside from here, trading just north of $6 a share at the close of the market today. I think spurred by the recent news as well as some of the buying activity that has been generated by some of the churn that has been provided by long investor. And I thank you for that. You may have made your way to the Aduro Clean Technologies story by nature of referral or by nature of your own due diligence. I just want to encourage anyone that is bridging their way over to my message to understand my charge, and that is to understand the uniqueness of this company, understand the power of not only the management, but the tight share float that we are operating on, the acknowledgement of why the company has went to the NASDAQ, how that uplisting has opened up capital market opportunity to project financing. It has been nothing but positive on the NASDAQ in providing the ample notoriety. I mean, why would the company have gone to the NASDAQ? Why would they pay, the uplisting fee and the maintenance fees and subject themselves to the audit scrutiny to uplist if they didn't feel like they had the goods? I know they have the goods. It is incumbent upon me to explain to you guys that I am a bullish share owner in the company. That share position is disclosed in the description. I am actually and have been paid by Aduro for a couple of years now to share the story and to convey a story that has evolved to the positive, not only on the company side, but also the share side. And I cannot express to you how rare that is. I know that there's thousands of people out there, investment groups, the like, who will sell you on the idea that they've got, the answer and the secret sauce and recipe to stock market investing. I've been doing this long enough to tell you that that is very, very rare. It's very, very difficult. I'm not going to say that it's impossible because this, as it sits right now, is, I'm up, 150,000 of profit in the company. Some that you'll get to listen to tomorrow are probably up 7 figures in the company thus far. And I think that they also look at it the same as me in that the story is just getting started. And so the upside potential is not reflected currently in its market value on a comparative basis, on an Aduro compared to itself. I just think that with the magnitude of this technology as it lends itself to the grander pollution problem and their ability to take a big piece of market share, and really their lack of competition in the space really speaks to the potential opportunity here in the space. So I congratulate you guys. I absolutely, if there's anybody in the live stream tonight that's made their way over from, the newest churn and interest in the company, I do welcome you. Certainly reach out to me at your leisure, and I can help answer any question. I have a backlog of information that can help you understand my due diligence on the company, and I'd be happy to convey that to you. Take a short break, guys, and be back with you in just a moment. Really glad to be back with you guys for sure. I appreciate you sitting through the Aduro primer for tomorrow. It's going to be a fun opportunity to talk through some of the subject matter experts on the topic. We leave no stone unturned. I truly try to convey opportunity through the channel, and I know that there's a lot of patrons to the I2 that have not participated in Aduro Clean Technologies. They've made their money elsewhere, and that's totally fine. Opportunity in the stock market could come by way of S&P 500 investing, but I will say that expectations have to be somewhat aligned with what could potentially be garnered from those specific cornerstones of opportunity. Dividend growth investing has its limitations, as well as passive investing. But when you're talking about speculative investing, the swings to the upside and the downside can be extremely unnerving. And so I do want to prepare each and every person out there that may be looking at this as an opportunity to, do your own homework. A lot of risk can be mitigated by assigning the correct level of uh, position size in your portfolio, not over leveraging to a position that you might have a little bit of animus with in the first place. So please keep that in mind a little bit when you're making your own investment decisions and adjust accordingly. But for the people that are potentially new to the message, I do want to really talk about my approach to self-directed investing, why it makes sense, why I think that in the face of a society that really kind of frowns on anybody doing their own thing, I think there's reasons for that. I think the way the system is designed now, I think the system is designed to take advantage of not only the retail investor, but also folks that seek out assistance from the financial institutions as a whole. I think that some financial institutions will pay a lower than average interest rate, and I think it should be illegal. I just dealt with this with payments. I tried to make an overage payment to my car. They refunded me the $57 of overage on the payment that I made instead of applying it to the loan like I wanted. It should be illegal. Same idea with investing to retirement accounts, things like that. And you've got to kind of recognize the small nuances and understanding that even home mortgages is probably the biggest fallacy that people have, in that if you wanted to pay extra on your mortgage, that those mortgage payments would be held until term and then applied to the loan. Why? It's because the system, as I insist, is designed to take advantage of people who are just trying to pursue, in this case, the American dream. I do see somebody, Shamir, is tuning in from Canada. Thank you for your time. I really appreciate it. That's very cool, man. And I know we've got a lot of international subscribers to the message too. So, but you know, can I control any of that? No. And my message speaks to an approach that would set yourself apart in your own unique capability and your own unique style that you select. And as long as it makes sense to you, then it's right. And I think the real opportunity in self-directed investing is to understand that you're the best advocate of your program. And once you get that validation of understanding the power of a liberated dollar by deploying an independent approach, is very, very, very powerful. I found this out in my early 30s. I wish I would have known this in my early 20s. I would have already been a millionaire. I'm knocking on the door. I'll share my portfolio with you guys in just a little bit, so you kind of understand where I put my loyalty in the deployment of the self-directed program. You know, it's for you guys to deploy as you see fit, or if it's something that you're not interested in, then you know, you can seek out opportunity elsewhere. This stuff absolutely works. I'd rather subject my monies to the ups and downs of the stock market than not subject my dollars to risk at all and try to grow that risk, to grow those dollars in the face of an inflationary pressure that sees the dollar losing value each and every year that comes and goes. Right. It's more of a requirement to invest to make sure that you're outpacing at least the effects of inflation. As our buying power diminishes over time, I think it becomes more of a requirement to seek out investing. Certainly the discipline is something that we exercise, fairly common on the channel. My perspective is something that I would expect that you guys can relate with, as somebody who doesn't make millions of dollars on YouTube. I actually enjoy my job, which puts me in a very, very unique camp of people who maybe even don't want to work, or they just want to become millionaires overnight. I wish you all the best in that. I'm not lucky enough to do that, so I would rather do it calculatively and with a deliberate approach, and I'm doing that. I'd rather do what I feel like I am more guaranteed to do. Um, and if it takes a little bit more time, I'm okay with that. It doesn't bother me a bit. My intent behind my message is to try to get to those investors that may not feel that they have anybody on their side. I'm a kind of can fill that role of a coach, give you those swim lanes, give you those ideas about stock market, not strategies, but philosophies, and philosophies that can make sense down to the very specific of, you know, buying a share of SPY and what that means to you and participating in the S&P 500. All right. Challenging the system, we already talked about. And then of course, to share my journey along this line, started YouTube about, I guess now maybe 10 years ago. Anyway, I've been doing this a while. I started with a total portfolio value of 72,000 in the portfolio when I started this YouTube adventure. I don't know why I started it. I don't know what, you know, spark allowed me to come on and try to share my thoughts with people. But we're very, very thankful on the ability to get through to people, to touch people from all over the world, and to really deploy a one-on-one opportunity for people to understand how and where my loyalty lies and how I deploy my strategy. So let's kind of jump in here and we'll see. I haven't done this for a while. So for you guys that are new to the message, I'll show you the actual portfolio. This is a passive joint brokerage account, 99% full of stocks. This is only 2 stocks in this, with the lion's share of holdings, of course, and my flagship holding, Aduro Clean Technologies, and then significantly less of a holding in Plurilock, which is extremely undervalued right now for the amount of money that they're garnering and the expertise that they hold on the team in the cybersecurity space. And I expect things at some point to turn. It can take months for these things to turn, but I love what they're doing. I love their ability to knock down multi-million-dollar contracts, and they're doing that. They've done it, and they'll continue to do it with their administering of their special critical services business. And I think they're in the right stuff. And my position reflects my bullish conviction in Plurilock, but it's not one of those larger positions that really dominate the portfolio. So it can sit in this recessed amount right here for a while. It doesn't hurt me at all. Okay. But when Aduro goes up the way that it has, it moves the portfolio pretty significantly. All right. This is Roth IRA number 2. Got some S&P exposure there. That's a fairly larger position. I think there's 50 shares in there now. The Aduro position there, that's about 12,500 shares there. Got a nice position. These are in the Roth. So these cornerstone positions are in some fairly large value plays, as you can see, and a couple of, you know, plays that I just added today, actually, or yesterday. I went ahead and bought Orico. It was a shift of the shares, actually. I owned 20,000 shares initially, and now I own 25,000 shares in the Roth with the Roth protection of the upside because I saw the entry value at 21 cents and I took it. And I was glad to do so. I did actually exit the shares for a small amount of time at 28 cents, took the swing trading profit. I was happy to do so, monitor the company for a couple of days. It digresses to where I thought was a good entry, enter back in at 21 cents. And then Pure Cycle, unfortunately, I did not get the entry that I knew was about as attractive as you could possibly get with the company. I'm not as bullish on Pure Cycle just because of their the underlying technology that they are deploying, but they are significantly further along the line in their commercialization efforts. And my goodness, if you're going to throw hundreds of millions of dollars of capital toward a project, which is Pure Cycle in a nutshell, my goodness, something's got to stick. And so the starter position that I have in Pure Cycle is a token position. It can go to zero for what I could say. It could go to 25. And I wouldn't be surprised with either one, but I do think the digression in the stock has probably been a little bit overblown, I think. And so we'll see if we can catch a little bit of favor in the market on the Pure Cycle trade. But you guys can see there the value plays of BlackRock, JP Morgan, Caterpillar, Traveler, IBM, Costco, and Visa, and then Orico, which is the $20 billion property, the Santa Thomas project, which I'm covering right now on the channel. It's one of two projects that I'm actually covering. Orico and Aduro are the only two companies I'm covering right now on the channel through the network of investors that bring these hidden gems to you with the opportunity that exists in the fund in the underlying asset. So Orica is sitting really, really pretty. It'd be fun to see the political environment, which has shifted in their favor, kind of come to fruition for Orico, and I think that could really re-rate the stock. So we'll see what happens. This is Roth 2. This is mine, only 3 holdings. Okay, so obviously lacking diversification. This has been diversified in the past. I've built this up over time. 107, just a little over 172,000 in this Roth. Number 2, this is mine. Large position in Aduro, 26,200 shares in this portfolio, with a couple of token positions in Cummins and Goldman Sachs. Okay, so happy to share that with you. This is another fundamental shift in application. This is all of the 11 sectors here represented through the Vanguard sector ETF portfolio. I've owned this since, what was it, guys? March of 2019, I believe, is when this started. And got this set up to reinvest. You know, we started it with 2,500. We're up to 35,691. With the recent digression in the market, this went all the way down to, I think, 30 grand. Now it's back. It's made up all of it and then some. And I think we're back to levels that we started either just post-election or prior to the November elections before the determination was made on the new president. So, but that's how that shaked out. Very, very satisfied. This is one of those cool things that I do on the channel where I actually share my dividend portfolio. So we'll let the ticker run for a little bit. These are actual holdings that I have. I'm not going to go through all of these, but it's 49 total holdings with the portfolio rendering about 3,287 on a dividend every year. You can see here as it starts over, this is the top 25 holdings in the portfolio. 52,000 is held in the top end of the portfolio, starting with Lockheed Martin, and then sequentially going down to the lowest holdings. The next in line is McDonald's, Cisco, Sanofi, Bristol Myers, Johnson & Johnson, Enbridge, Verizon, Chevron, British Petroleum, British Tobacco, MO Ultra Group, HD. So it goes down. Those are the top 25. So kind of cool. I'll let that play one more time, and I'll kind of pick up and give you just a verbal on where those holdings are. But like I said, just over 52,000 in the top 25 positions. So British Tobacco, Altria, Home Depot, Duke, Comcast, CVS, Energy Transfers, that's Canadian Imperial Bank, Pfizer, Procter and Gamble, Total, General Dynamics, Nextera, TAP, and Kimberly Clark. Yeah, we'll round out the top 25. And then we'll switch and we'll look at the bottom 25 in the portfolio, just over 27,500 in the bottom portion of the portfolio. You can see starting with Southern Company, Pepsi, Raytheon, and you can see the respective tickers there. A couple newer companies that have added: Albertsons, which is the largest grocer in the United States, followed up by Kroger, which is Kroger in most of the nation, and then Fred Meyer on the West Coast. So I wanted to put the big grocer in there. I've owned Kroger too. I like it. Kind of an easy company to own. You know, obviously these dividends are value plays. Valero, Royal Bank of Canada, right? Oran Telecom, Gilead, Mondelez, AbbVie, MetLife. So that's the bottom tier in the portfolio. So enjoy conveying that to you guys too. And then we get into another aspect. So we close down the dividend growth aspect, and this is a portfolio that is working for me while I'm going and working at my job. So, you know, this is set up for dividend reinvestment. Each of these companies represent a small business, which is making me money. And I really like the prospect of dividend growth investing, but I don't do it in its entirety. This is the growth portfolio. So Palantir, Apple, Meta, Amazon, Google, CrowdStrike, Adobe Systems, Salesforce, Microsoft, NVIDIA, and Chipotle Mexican Grill, my favorite fast casual restaurant. Started this with around $9 grand, just hit the big 10,000 threshold within a couple of months. So, you know, where I talk to a lot of new investors and they don't have that first 10,000 of invested capital, this was one that I just manufactured up to that first level. It can take a new investor a little bit to get up to that level, and that's okay. But I think the real takeaway from the I2 and my approach in how I look at blasting through those financial thresholds that can really be barriers for a lot of people, I would like people to look at them as strategic goals. And acknowledge when you identify, hit them, and then on to the next one. The next financial threshold in this portfolio is 25,000, right? And then 50 and on from there, as I've broken down the financial thresholds for people so they can kind of understand what they're shooting for. The thrift savings plan, you guys know that I pulled kind of a jack move at the beginning of this year. Moving a lot of my money to safety at the first of the year, watching the market go down. I reintroduced capital to the markets, down 11%. The market ended up continuing to retrace to the tune of about 14%. Some suggested that we were at 19% negative, perhaps maybe in the NASDAQ. Flirting with the idea of going into bear market territory. We never actually did, recession category. So we were on the fringe of a technical recession in 2025. We never ended up getting there, which is fine. I just rode that continue down, and now we're back to even. So I was able to push back into the market with a relative 10% haircut on the market in 2025. But now we're back, and that gain there has really proven itself out, approaching the 150,000 mark in the TSP. So very cool stuff. This is the corporate account with Aduro and SCHD, the high dividend yielder ETF. So just shy of 50,000. Obviously, Aduro drives that as well. And we'll look into report out on that as it continues to grow. I am an advocate of having some cash savings. I'm a little light. I'd like double this. I'd like 50 grand for what I'm kicking around. Hell, I could sleep easy having 100 grand of cash just sitting there. Fidelity, I own 4% on my cash anyway. So I'm making a pretty good clip on the idle cash, but this is a little light, but this is what it is at the time of filming this video to convey to you guys. So have a little cash reserve there. And then the only 401k that we own between us with the 5% match, 11,295. So that also has surpassed the $10,000 milestone. Very cool stuff. And then the alt investments, I share this just as kind of a cool angle to let you guys know, that I'm also interested in, other value propositions. You'll notice that I don't have precious metals. I'm not against it. I'm actually an advocate for it. I'm just not in a position to meet the safeguarding responsibility of precious metal just yet before I start to transition some of my paper assets to hard assets. And I look forward to the day when I can do that. It just doesn't make practical sense right now with the amount of moving I do with my current employment, et cetera. And again, being able to settle somewhere and provide the proper credence to the security responsibility over owning hard assets. These are the assets that I find I can own now and be okay with. All right. So remember how I talked about starting on YouTube, 72,000 of portfolio value, total portfolio value now, as of today's count, 846,327. So we're heading in the right direction. This is power of a liberated dollar. This is not monopoly money. This is not fabricated. This did go down over the last, let's say, couple of months of tariff scare. I just didn't lend a lot of credence to the noise. And truth be told, I was actually buying through the madness, and that's a strategy that has paid off for me significantly through the course of my investing. And it's one that I would expect you guys to look at buying when everybody else is panicking. And it's hard to do. It's not easy. If you just listen to the mainstream media, you'd think that everything is absolutely going to hell. And it's tough. It's tough when all of the mass media is talking about recession every single day, tariff scare every single day. All of that rhetoric is gone, like seemingly overnight, and we've stopped talking about it. It's just really incredible to me. The ways of the rhetoric playing into momentum to drive emotion in people. And I just laugh a little bit anymore because I understand the game. And it's one of those games that if you understand the game, you can absolutely profit from it. Usually it takes, not buying into all of the noise and continuing to stay true on your program. So but guys, I was going to do a little bit more of an extended. This is my first week back actually in quite a few. I've done 6 live streams in 2025. So I'm not on my normal pace. We don't have quite the subscribership in tonight's live stream. So I'll look to wrap it down in the next, 10, 15 minutes, unless you guys have jarring questions to pose to the group. For those of you guys who did make it in here, I do appreciate you and your time. Very cool stuff. but Michael's in the house. Pfizer manufactures, markets, and distributes more than 313 drugs in the United States. Pfizer's a buy. Michael, it was #1 on my buy list this week. I did not end up purchasing value this week. Like I said, the re-entrance to Oracle and the purchase of the starter position in Pure Cycle, which I'm not really that excited about, outside of the fact that again, it's a stock I've monitored that has had some pretty interesting favor in the market, even with the digression, and it's got some interest on the institutional side. You know, the Drunken Miller buy was of interest to me, putting some interest and backing behind the space, and it'll just take some momentum to break the shorts. I think the last short interest in Pure Cycle I saw was close to 45%, so pretty nasty short interest in the company, which can absolutely weigh on the company. So, but yeah, Pfizer's a buy right here. Absolutely. I think it's trading at like what, 8 times earnings. So pretty crazy. Yeah, I do own Pfizer. I just would be emboldening my current position. All right. 2-bit DaVinci channel partnered with Aduro. Looks like it won't be just one story on his channel. Looks like it will be ongoing. Yeah, so 2-bit DaVinci has covered Aduro a few times in the past, and I just think the production quality is fantastic. I enjoy watching the content. Again, when you water down the opportunity to sharing a stock opportunity, it's really only as good as the individual who is in receipt of the message, does their due diligence, and puts conviction behind the position that they have justified buying for themselves. Okay. In other words, I can tune into a video and I can get really excited. I watched the video and I was like, man, maybe I should buy more, um, because it was really well made. But if you're going to enter this story and you don't understand why, you're going to sell up 25%, 10%, 50%. You're going to sell and you're going to miss out on the fundamental reason as to why you should be fairly long. I'm not going to say ultra long. I think there's going to be profits to be had, certainly within the next short window, which is within 24 months. And then if you're willing to hold the stock within just a short 5-year window on the medium term, there's even more profits to be had there. And if you are willing to just make a commitment to the stock ultra long, my goodness, I mean, this could be a 5-figure returner for people. If we can get past this preliminary, I mean, you're talking ultra long, let's say 10 years plus on the company. My goodness, this could be a multi-year, multi-bagger for people. And it's going to have the face of a way different company down the line. It's going to be fun to watch, that's for sure. Not sure if I was going to convey that I'm in it for the ultra long. I think my strategic goal is the medium term, 5 years. I say that tongue in cheek, but I would say more accurately, I'm really looking at the short-term window here to see where that drives the stock. I have my own price target of 37.50 on the company based on my independent analysis. That's just where I sat. That puts it at a pre-stock basis of like $11 at 37.50. Prior to the 3.25 reverse stock split that the company incurred to drive this current share float down to its anemic levels. I mean, there's just not that many shares. That's the reality. The float sits at 30 million. There's probably 17, 18 million in the float. So that's unheard of. So when we get volume of 350,000 like we did on, what was it, Wednesday, we see a huge increase in the stock. I think it went up 10% that day, 10, 12%. That's great movement for a stock that has just been on the NASDAQ for, a little bit. So exciting stuff. But even as retail investors can drive the stock up and gin up a few hundred shares, a few 100,000 shares of traded per day. I think that it speaks to the opportunity of when investors on the institutional side are going to come off the sideline and start buying the shares, which they are not doing right now. There's starter positions in the company. I mean, hell, I think I own more than BlackRock does at this point, which is kind of cool. It's kind of a cool thing, you know. I own more than all the institutions from my last count, actually. And the network that will be represented tomorrow of our network investors, they absolutely do. One in particular, I'll let that investor convey on their own their position in the company being a little bit north of 1% of the total shares outstanding of the company. That's impressive. So, and I think the other share owner actually owns significantly more than that. So, pretty impressive stuff. You know, I'm a small fry in this group. I think I'm probably the last in line, but my share ownership is reflective of what I wanted out of the company. And just to convey to you my thoughts on building the position in Aduro Clean Technology, my goal on the onset was 25,000 shares, 25,000. Okay. So I sit on just over double that position right now, which speaks to my conviction to continue to accumulate shares on the dips and things like that. But, you know, I think it is fair to say that the position is established at this point. I wouldn't discourage any new buyers stepping into the stock from purchasing the stock here. You know, on a pre-split basis, it's trading at $1.92 at the close today. $1.92 is fails in comparison when we're talking about a market cap of company that should be over $1 billion now. I mean, it's a $2 billion company, $2 billion, $3 billion company right now, and it's trading at 170 million. And that valuation, I don't say that lightly. When we start to get the value validation from these large institutions that are putting some commitments and some MOUs on the books to start to deploy the technology in their operations, that's really going to be the tipping scale. And I think, well, not for me to make the investment, but for the grander market to put that necessary validation that I think they're looking for on the Aduro Clean Technologies opportunity. We'll get there. We'll get there. You know, I think it should be now. I get a little impatient holding a stock that deserves a premium valuation that is not awarded a premium valuation. It's the opposite. It's awarded a discounted valuation. Okay, that's the market for you. The very imperfections that can be discovered are no more egregious than you'll find in what was a penny stock and now is not a penny stock anymore. So stock is $6.20, I think, went up pretty good, close to 650 in the aftermarket, close to all-time high since coming public on NASDAQ back in November. So very cool stuff. So look like it won't be just one story on the channel. So David, thanks for sharing. Appreciate you, bud. I'll get your other comment on here too. UCOR is one of very few processors of rare earths. UCOR is like the Aduro of metals that are in permanent magnets and many crucial applications. Now, do I have your attention on that? Certainly. I appreciate the cool thing about you getting to come in and rap with me. You're talking to a real person, and very cool stuff. I wish you would have put the ticker symbol in there. That would have been cool. I speak in ticker symbols, David. But yeah, it's funny you say that because I've had lots of teachers in stock market investing. I wasn't one of those that came out of the womb knowing it all. And that's what I look to convey to patrons of the channel is maybe get a little lesson. And I know that there's a lot of people out there with a lot of feelers in a lot of different markets. Hell, I can't cover them all. Our network does a pretty good job of covering the microcap space and especially the penny stock space to make sure that we're combing over it fairly often to make sure that we're not missing a huge value play. But I will tell you, David, the majority of our due diligence on companies through the network renders itself in about 99% of the time to disqualify companies and not talk about them ever again. It's really the top 1%. It might be eligible one company out of every 100 we vet that we even look at as a potential, and the majority of those get eliminated too. If the two that I am sharing on the channel say anything about where our loyalty lies, there's no way that I could comb over microcap, especially the penny stock space, and come up with 25 stock picks to look at. I know there's a lot of people that spend their entire time just focusing on there. I see the ticker. Thank you, David. I appreciate that, man, and appreciate the tip. It's awesome. I will look into it too. Very cool stuff. But the power of social media to bring different ideas together. We didn't have this when I started stock investing. I didn't have it. I had to get it through the paper, once a week, not every day and not real time. I mean, I'm like a kid in a candy store here talking about stock and different opportunity. And again, with the latter company that I cover with Oracle in the junior mining space, that's a space that I typically wouldn't touch with a 10-foot pole. It's horrible for a lot of different reasons. I've covered a lot of different companies in the space, and man alive, I haven't met a CEO out there of a junior mining company that doesn't say that they've got the greatest mining property in all phases of mining. They could have PEAs done, they could be actively mining, they could be finding all this gold and silver and helium. I mean, I've covered it all, man, and they could be finding it, but it's how they manage that capital. So they start finding minerals, and then they start mismanaging the mine and over investing, and not taking into consideration certain tribal acknowledgments and things like that, and then they lose it. But the challenge is fun to cover for sure. It's just that, my goodness, I don't put it quite as bad as the airlines, but I do put it somewhat in the same category. I feel the same about autos. Not a space that I'm really that excited about. If I was going to get excited about anything in, let's say, movable objects, it would be the cruise industry, right? Because it's one that I'm intimately involved with. But very cool stuff. Thank you for the tip. I appreciate it. I'll throw that ticker symbol on the screen here for everybody. UURAF. Look at the video by their CEO, Pat Ryan. I'm very, very confident that you will see he's credible. Sure. And it's cool you say that too, because it's kind of one of those attractive elements to dealing with smaller companies, in that I've spoke with the CEO. I've interviewed Ofer Vicus on the channel, not many times, and I would like to have the opportunity to do more interviews. I've never interviewed Eric Appelman with Aduro, never interviewed Mina Bechet. I'd love to have a financial discussion with Mina, because I think he's a hidden gem with the company. Marcus is a little less available through social media, outside of just the unique pieces of content that the co-founder has put out there many years ago, actually. But he was present. He was in downtown New York, Manhattan, when they uplisted. So it's kind of cool to see Marcus, reach that pinnacle of validation with the company, and I'm quite certain that he's still intimately involved with the company, but more so Ofer as the co-founder and CEO of the company. But they know where I'm at. I do a hell of an interview, and it's more of a discussion, not an interview, but they're just a lot more accessible when you get to meet with them and talk with them, and find out that there's a lot of good people. There's a lot of good people with a lot of these micro cap or smaller companies that I've interviewed that I knew were credible people, no doubt about it. They might have been up against the grid to try to make something out of a company that was inevitably challenged, right? And that is the difficult part. In other words, not all small caps survive. It's the opposite. Most small caps fail, and that can be for a number of reasons. I've seen small caps that were absolutely phenomenal stories that got beaten down so bad in the public market, and then hedge fund would step in and take them private for pennies on the at a premium of what they were trading on at the on the open market because they had just been beaten down, and the disconnect between the true value of the company and what shareholders assessed as the value was, there was way too much disparity in that application. So hedge fund just step in and say, if it's trading for 17 cents, we'll pay you 59 cents. You're done. Share owners don't have any more opportunity. And I've seen that happen too. But again, that just speaks to the drastic potential for disconnect between true value and real value. Whereas, what's the most disconnected stock right now that gets the most attention on the major market exchange? Palantir, right? I mean, it's trading for what, 600 times forward earnings right now. Um, and I did sell Palantir this week on a swing trade. I owned it for a couple of months, 100 shares, up a $3,000 bill, went ahead and exited the position. Still retained my small position in my growth portfolio, but was able to leverage into a new position free of charge. So that was nice. And it was within the Roth, so that $3,000 is tax protected, which is nice. So. But anyway, David, thank you. I appreciate the comments tonight, and it's almost like I was having a discussion with you. I appreciate the share there, and I will absolutely look into that. Thank you for the share. If it's good enough, I'll consider it a network finding. Just remember, man, we're pretty scrutinizing with what we're looking at. So Loop Technologies have contracts and income. Aduro is forever developing their technology. That's a perspective, and I can appreciate your opinion. I disagree wholeheartedly. I actually look at it the opposite. I think they're moving at the speed of light, moving from what was just a couple of years a third-party batch scale validation to continuous operation through R2, and now an inevitable next generation process with it's a per day production that's on the smaller end, I will concede, but the production unit is the demonstration unit is going to be that multiple tons of day per day of production. And I guess I would challenge you to identify with, if you looked at Aduro for as long as I've owned it, 3 years. I look back over my time of owning it every single hour, every single second, every single minute of every single day. And this isn't to charge to buy the stock. I don't give a shit what you do. I don't think there's anywhere along that trajectory of the stock that would have been a aha moment to step into the stock. In other words, you could have bought the stock on year 1 that I started recommending it, year 2, year 3. There's been swoons of, light releases for news, etc. But as far as progressing toward their technology, I'm not really sure if I understand the vague statement that they have forever been developing their technology. Okay. Forever means an infinite amount of time across the time continuum perspective. So is it thousands of years? Well, no, not really. The right answer is they've been developing it for, let's say, 15 years, and having it been accelerated the last 3 with the good work of Brightlands Camelot, the campus there, the validation from industry. And I think that would be more of a fair knock on the company if you were going to offer more of a bearish angle, which I can do as a good investor. I can offer both sides of the coin. In that, look, okay, if they've been with the Shell Game Changer program for X number of years now, what gives? Are they still in the program? Are they still progressing in the program? Are they stalled out in the program? Or has the program died in and of itself? And I don't think the dying in the program is fair, because all I can go is on the last projection that they were in between stage 4 or 5 of a 6-stage program, right? And this is Shell Oil. They're not going to rush to appease you or me. So and so we go back 3 years and look at the Shell entrance to Game Changer, but then we look as late as last year for Total Energy. And I guess I would challenge you to explain to me how fast you expect big oil, right? Big industry to move as it relates to the validation of a technology like an Aduro Clean Technologies or any other technology that they're looking to validate, right? And that would be my challenge to you. Now, again, it doesn't matter if you hear what I say and you're like, okay, I agree with you, Ryan, you won me over. It doesn't matter. I don't care what you do with your money. I don't care what you do with anything, to be honest with you. But I find it interesting how a lot of people definitely care about what I do, right? The 150,000 of profit I'm up right now, that's a pretty good chunk of money, right? I think, in other scales or other groups, somebody would come on and say, look, I'm up 3,000% in a position, and they invested $100 in the position. Well, right on, you're up, $700. Congratulations. I'm up over 150 grand in this position for a position that I haven't put but 25% of my net assets in because I have conviction over it, right? But, as far as looking at the risk reward, I wish I could lend some sort of merit to your statement. I just can't. I'll go so far as to say that I just disagree with it because I think in retrospect over the last 3 years and just as of recently, the last couple of weeks, if you've read between the lines, and understood what these developments have meant for the company, then I would say that they're more accelerating than dragging their feet or decelerating in momentum towards their goals that they have not changed for many, many months now with the proposed goal of NGP. And I would say that, you're not the only one that says, hey, maybe we reach that milestone and it continues to push, but Aduro hasn't done that yet. We reached the milestone for third-party validation. We reached the milestone for R2. I have no reason to believe that we're not going to meet the milestone for NGP, and that's going to satisfy a lot of the going back and forth between their current customers through collaboration and what they're trying to do to lend those collaborations to eventual partnerships. If they don't ever get a partnership, then I'll eat crow and I'll agree with you. My bullish thesis has me in the camp to believe that they are going to win over some of these people that are actually paying to evaluate the technology. So kind of makes sense from a common sense perspective to start to put the pieces together and, put a thesis together that would suggest, gosh, why did they go to NASDAQ if they didn't have the goods? What are these multi-billion-dollar companies seeing if they don't have the goods? Why is Aduro putting millions of dollars into this technology to further its commercialization efforts? And you start to kind of run out of ideas, and like all told, you could be right. Maybe inevitably they just continue to uh, validate the technology and it never comes to fruition, right? There's always that potential, but the trajectory just doesn't speak to your point. The trajectory is a positive one. And I'm sorry that you see the trajectory different than me, but we're just going to differ in our opinion. But I appreciate you coming on and offering your comments. Thank you. Very cool stuff. So Ken's in the house. Kathy says 2 hours. I don't think I'm going to go the full 2 hours. I think we're going to go an hour and a half tonight. I'm cool with that. Shamir from Canada, thanks again for making your way on the live stream. Very cool stuff. I know it's been a while. That's probably why we didn't grab a whole hell of a lot of patrons to the message. No problem. I'll throw down just the same, and we'll do our very best to cover the patrons who take their time to come in here and see my unique perspective as I'm looking to build independent wealth as an individual. Again, I just back to my point with the previous guest who made their way on. There's something to be said about social media and the people who spend the majority of their time seemingly focused on everybody else And I think that potentially might be a fallacy in that time spent focusing on others is time spent not being focused on you. And call me self-centered, call me arrogant, call me what you will, but the truth of the matter is I spend the majority of my time focused on me. And by doing that, I'm able to provide for the people who are most important to me, and that's the family, right? So this is turning out to be a legacy investment for me. I'm not doing it for the money, to be honest with you. The money will be cool to look at and say, okay, yeah, it materialized into a good thing. But for me, it absolutely is the affirmation of my suspicion that it is possible to put together fundamentals that we deem attractive in the investment landscape that potentially others don't see in way of that same opportunity. And it is rare. And there are people out there just like me and many others that are looking and even go so far as to say that they have those answers and project those answers to the grander audience. I'd like to set aside the potential that perhaps we're on the right stuff here. And so I'd like you guys to stand by. I'll try to get the video to the panel discussion out tomorrow. If there are some folks that made their way over or will catch this after the fact from Twitter, from X, great. I welcome you if you're brand new. You're absolutely going to want to listen to Yazan speak. You're going to want to listen to Mariusz speak. You're going to want to listen to Penny speak. I won't speak that much because you hear me speak enough, but I will host the panel tomorrow. And me, just like I suspect you to be, am very, very encouraged and very interested in what that group has to say and as far as reaction to the most recent news on Aduro Clean Technologies. So very, very cool stuff. But anyway, guys, I appreciate you tuning in for the hour and a half of the live stream. I know it's been a minute. I'll try to make it more of a constant thing, but certainly invite you to subscribe if you're not subscribed to the channel. Help us support what we're doing here through the network of identifying undervalued assets that have gone undiscovered up to the point of discovery by the network, and we look to convey those to a grander audience and see where they go. It's been a hell of a ride thus far, and I think focusing on the past is probably more of something that I don't typically do. Whereas with the opportunity specific to Aduro, I typically like to keep my eyes to the horizon and keep my focus on the things to come. Right. So appreciate you guys. Thanks so much for tuning into the live stream, and we'll potentially see you next week. Take it easy, guys. Have a great weekend.